If you're only looking at the price in the stock market, you're only seeing half the truth. The real story is hidden in the volume. In the world of stock trading and investing, this line can change your way of thinking. Many people trade and make investment decisions just by looking at price charts. But the author says the real power always lies in the relationship between volume and price. Volume shows how many people are actively participating in a stock and in which direction their activity is headed. When the price goes up or down, the volume tells you how significant that movement is. The author makes it clear that volume analysis not only helps to understand the activities of large institutions and market makers, but also provides a strong foundation for one's own investment decisions. For example, if a stock remains stable for a long time and then suddenly has a big breakout with high volume, it could indicate that new opportunities are emerging in the market. Conversely, if the price doesn't rise quickly even with an increase in volume, it can be a warning that the movement is temporary and could reverse quickly. Chapter 1, Part 1. In this chapter, the author also says that the biggest advantage of volume analysis is that it reduces the influence of emotions. Many investors make quick decisions due to fear and greed. By understanding volume, you can determine when to follow the market flow and when to wait calmly. From this perspective, trading is no longer just a game of speculation, but becomes a data-driven and controlled process. According to the author, every investor should deeply understand the patterns between volume and price. This understanding helps you decide when to enter a stock, when to hold it, and when to exit. It is not just a technical skill, it also improves mental discipline and patience. Furthermore, volume analysis is also used to identify market trends. For example, if a stock is constantly rising but volume is decreasing, it means the rally strength is fading and the possibility of a reversal is increasing. Similarly, if the stock is falling but volume is rising rapidly, it indicates that investors are selling due to fear and market pressure is increasing. The author explains that correctly reading volume and price requires continuous practice and experience. It's difficult to understand which movement is long-lasting and which is temporary just by reading a book or looking at a chart. So this chapter teaches us that real understanding and lasting success comes from practicing volume analysis. Ultimately, the author emphasizes that success in investing or trading doesn't just come from the number of profits, but from the ability to make decisions and discipline. The right combination of volume and price not only helps you choose the right stock, but also makes you mentally stable and confident.
Chapter 1, Part 2. Moving on, the author says that volume price analysis not only helps in trading, but improves long-term investment. Often, investors make decisions based only on price and forget that the real power in the market is hidden in the participation of many people. Volume shows how many active investors believe in a stock. If the price is rising and the volume is also strong, it shows that the rally is powerful and likely to continue. Conversely, if the price is rising but the volume is decreasing, it's a warning that the rally isn't long-lasting and could reverse soon. The author clarifies that the biggest advantage of volume price analysis is that it helps to identify fake movements and market manipulation. Sometimes large institutional investors and market makers drive the price in one direction to confuse small investors for their own benefit. In such times, volume tells the real story. If the volume does not support their movement, it means it's just a deception. The next important point is trend identification. The author says that the right combination of volume and price helps you understand which way the market is heading. For example, when a stock is going up and the volume is also constantly increasing, it says the bull's power is strong and the trend is long-lasting. Conversely, when the price is falling and the volume is increasing, it indicates that the bearish movement is getting stronger. By recognizing these signals, an investor can enter and exit at the right time. The author shares another important point: mental discipline. Many investors ignore volume signals and are driven by emotions. Fear and greed force them to make wrong decisions. But if you learn to read volume and price correctly, you can make your decisions data-driven and stay away from emotions. At such times, patience and waiting for the right moment give the biggest advantage. The correct study of volume and price gives you the understanding of when to take action and when to wait. This part of the chapter also makes us understand that when you include volume-price analysis in your trading decisions, it not only gives you good profits, but also limits losses. Finally, the author emphasizes that the real benefit of the power of volume-price analysis is only gained when it's put into continuous practice. Its full benefit cannot be taken just by reading books or looking at charts. Real understanding and lasting success come only when you recognize the true strengths and weaknesses of the market from practice. Knowing which movement is long-lasting and which is temporary is most important. The most accurate way to do this is volume-price analysis. The combination of volume and price tells us which way smart money and weak money are working in the market. When a stock goes up quickly and volume also increases, it indicates that big investors or institutional investors are active in this stock and the rally is strong. Conversely, if the price is rising but the volume is weak, it's a warning that the movement is superficial and could reverse soon.
The next important topic is the study of volume spikes and price movements. The author says that a sudden increase in volume often indicates that a big movement is coming, but this cannot be understood just by looking at the volume. It's only confirmed if the price movement supports it. If the price is rising but the volume is decreasing, it's a sign of a weak rally, and investors should be cautious. The author also explains that mental discipline and patience are the key themes of this chapter. Many investors make quick decisions at the first sign of a rise or fall, but volume price analysis teaches that waiting for the right moment is the real key to success. Guessing just by looking at a chart leads to mistakes, but by studying with volume signals, you can enter and exit at the right opportunity. In addition, the author says that the patterns of volume and price should be observed continuously. The market changes every day, and a pattern that worked yesterday might be ineffective today. So an investor should record every trade and investment, learn from their experience, and continuously improve their decisions. This part of Chapter 2 makes it clear that volume price analysis is not just a technical skill. It is a psychological and strategic tool that helps you understand the real movements of the market, identify opportunities, and reduce risk. When you put it into practice, you don't just decide to buy or sell a stock, but you make an informed and data-driven decision. Chapter 2, Part 2. Moving on, the author says that the biggest advantage of volume price analysis is that it clearly shows both the strength and weakness of a trend. For example, when a stock is constantly rising but the volume is decreasing, it means the rally's momentum is slowing down and investor confidence is waning. In such a situation, it's important to be cautious because a sudden fall can happen at any time. Conversely, if the price is falling and the volume is constantly increasing, it shows that market pressure is rising and there is a possibility of a reversal signal. The author also says that understanding the relationship between volume and price is important not only for trading but also for investment. Many investors stay in a stock for a long time but make wrong decisions due to not understanding the correct volume signals. Another important topic is the identification of breakouts and fake breakouts. Often, in the market, stocks reach a level where the price starts to rise or fall, but this movement doesn't last long. The author clarifies that trusting any breakout without a correct volume signal is risky. If the volume is strong with a breakout, it shows that big investors and institutional players are supporting this movement. Conversely, if the breakout happens with weak volume, it could be a fakeout. Volume price analysis helps you understand who is buying a stock, who is selling, and who is just waiting. This information gives you confidence to make decisions and saves you from trading blindly. In addition, the author says that the study of volume and price not only tells the direction of the stock price, but also helps in risk management. When you know that the volume in a movement is weak, you can correctly set your stop loss and exit points. This makes your trading safer and saves you from unnecessary losses. This part of Chapter 2 also teaches us that the practice of volume price analysis should be regular. It's difficult to get the full benefit of this strategy just by reading a book or looking at a chart. You can recognize the true strengths and weaknesses of the market only through continuous practice, pattern recognition, and experience. This skill gives you lasting success and confidence for a long time. The author also emphasizes that volume price analysis strengthens your mental discipline. When you rely on correct data, the chances of making emotion-based decisions are less. By controlling fear and greed, you can make more stable and correct investment decisions. In this way, both parts of Chapter 2 make it clear to us that volume price analysis is not just a technical tool. Rather, it is a method of strategy, mental discipline, and data-driven decision-making. It no longer keeps stock trading just a matter of decision, but also helps you clearly recognize the strength and weakness of trends. The author says that every movement in the market has its own weight and significance, and this weight is measured through volume. If a stock continues to rise and the volume is consistently strong, it indicates that the trend strength is sufficient and the possibility of it reversing is low. On the other hand, if the price is rising but the volume is decreasing, it's a sign that the rally is weak and investors should be cautious. In this chapter, the author also says that the practice of volume analysis helps you understand when a trend is strong and when it's weak. The analysis of examples not only shows the direction of the price, but also helps to identify the movements of smart money and weak money. When large institutional investors enter a stock, there's a clear change in volume. On the other hand, small investors are often part of the big crowd, and their influence is less. Volume price analysis gives you the opportunity to understand who is buying a stock and who is selling. The author clarifies that entering and exiting at the right time is very important in trading. The right combination of volume and price helps you decide when it's safe to trade and when the risk is high. For example, entering a breakout with strong volume can be right, while relying on a breakout with weak volume is risky. In addition, the author says that volume analysis also helps you identify opportunities in a range-bound market. Many investors get confused at such times when the stock is in a limited movement, but through volume signals, you can understand at which level there is more buying or selling pressure and at which level a breakout is possible.
This portion of Chapter 3 makes it clear that volume price analysis isn't just technical knowledge, it's a psychological and strategic tool that helps you make sound decisions, reduce risk, and identify the true market forces. Every stock behaves differently, and every market has its own pace. Therefore, to understand volume signals, you need to practice continuously and learn from your experience. For example, a stock's rapid decline and increase in volume show that pressure is building in the market, and this indicates investor fear. Similarly, when a stock is stable but volume suddenly increases, it's an indication that a major move is on the way. The author says that breakouts and fake breakouts can be easily identified through volume analysis. Often, stocks in the market reach a level where the price suddenly goes up or down. Making a decision based on price alone is risky, but if the breakout is accompanied by strong volume, it indicates that a major force is supporting it. On the other hand, a breakout with weak volume is often temporary and can reverse quickly. The next important topic is identifying smart money. The author says that large institutional investors and market makers often control the market by associating volume with their movements. Volume price analysis gives you the opportunity to understand who is buying and who is selling a stock. This information makes your decisions data-driven and saves you from making mistakes based on emotion. This chapter also explains that without volume price analysis, it's difficult to select the correct entry and exit points. When you trade according to volume signals, you make decisions based on real data, not just on speculation.
For example, from the right combination of volume and price, you can know when it is safe to enter a stock and when it will be most profitable to exit. Additionally, the author says that volume analysis also helps you with risk management. When you know that a movement has weak volume, you can correctly set your stop loss and exit points. This strategy limits your losses and makes trading safer. This part of Chapter 3 makes it clear that volume price analysis is not just a technical tool, it is a method of mental discipline, strategy, and data-driven decision-making. When you practice it, it helps you identify the real market forces, select opportunities, and reduce risk. In the end, the author emphasizes that the benefits of volume price analysis are only gained when it is applied with continuous practice and experience. The market changes every day, and because of this, investors and traders should always keep learning and improving their decisions. This is the key to lasting success. Chapter 4, Part 1. As soon as you begin to understand volume price analysis in depth, it becomes clear that every movement in the market has its own story. The author says that the right combination of volume and price gives you the ability to identify opportunities and reduce risk in trading. For example, if a stock's price increases slowly and volume also consistently strengthens, it shows that the rally is sustainable and more likely to continue. On the other hand, if the price is increasing quickly but volume is decreasing, it is a warning that the rally is shallow and could soon reverse. The author also says that volume price analysis not only shows the direction of the price, but it also helps you understand the movement of smart money and weak money. Large institutional investors and market makers often take advantage of the movements of small investors to hide the impact of their decisions. Volume price analysis gives you the opportunity to understand who is buying a stock, who is selling, and who is just waiting. An important point is that volume price analysis enables you to recognize breakouts and fake breakouts. Often stocks in the market reach a level where the price suddenly goes up or down. Making a decision based on price alone is risky, but if the breakout is accompanied by strong volume, it indicates that large investors are supporting it. On the other hand, a breakout with weak volume is often temporary and can reverse quickly. The author says that the practice of volume analysis develops patience and mental discipline. Many investors and traders make quick decisions, but by correctly studying the volume signals, you only act on opportunities. This saves you from trading blindly and makes investment decisions more stable and correct. By studying, you can understand at which level buying or selling pressure is high and when a breakout is likely. This part of Chapter 4 makes it clear that volume price analysis is not just a technical tool, it is a psychological and strategic tool that helps you make correct decisions, identify opportunities, and reduce risk. Continuous practice and experience make it effective. The author emphasizes that entering and exiting at the right time in investing and trading with volume price analysis is the most important skill. Not every market movement is an opportunity, so waiting for the right signals and the combination of volume is the key to lasting success. Chapter 4, Part 2. Continuing, the author says that the real benefit of volume price analysis is only realized when you apply it to practical trading and investment decisions. For example, a sudden increase in a stock's volume indicates that a large number of investors are entering that stock. If the price also rises in the same direction, it is an indication of a strong trend. On the other hand, if volume is increasing but the price is stable or decreasing, it indicates that investors are selling and a reversal is more likely. In this chapter, the author says that studying volume is essential for confirming breakouts. Many times there are fake breakouts in the market where the price rises or falls for a short time but quickly reverses. Volume signals remove this confusion and help you identify the correct trend. Breakouts with strong volume are often sustainable, while breakouts with weak volume are temporary. This information helps you set intelligent entry and exit points. Through this, you can separate yourself from the market crowd and make more correct decisions. The author also emphasizes in this chapter that volume price analysis is not just technical knowledge, but also mental discipline. When you trust the volume signals, you are not influenced by emotions like fear and greed. It gives you the ability to make calm and data-driven decisions. Additionally, the study of volume and price plays an important role in risk management. Trading with weak volume carries a higher risk. In contrast, entry and exit points in movements with strong volume are safer. The author explains that the practice of volume price analysis should be continuous. Just making assumptions by looking at charts is not enough. This part of Chapter 4 makes it clear that volume price analysis is a strategy, mental discipline, and a method of data-driven decision-making. You will only achieve lasting success and self-confidence by applying it with continuous practice and experience. The market changes every day. Therefore, investors and traders should always keep learning and improving their decisions. This is the real key to success. Chapter 5, Part 1. As we move forward, the author focuses on the more advanced technical aspects of volume price analysis in this chapter. He clarifies that volume alone does not give a signal, but it shows the strength and direction of the correct movement in combination with the price. For example, if a stock is consistently rising and volume is also strong, it is not just a temporary rally, but an indication of real market support. On the other hand, if the price is rising but volume is decreasing, it is a warning that investors are losing faith and the risk of a reversal is increasing. The author says that volume price analysis is extremely important for understanding market patterns. Making decisions based only on price in trading and investing often proves to be harmful. Volume signals help to let you know who is buying a stock, who is selling, and when the large institutional forces are entering the market. This information helps you make data-driven and confident decisions. Another important aspect is identifying breakouts and fake breakouts. Many times in the market, a stock breaks a key level, but the movement is not sustainable. The author clarifies that a breakout with strong volume is more reliable. Breakouts with weak volume often confuse investors and reverse quickly. Therefore, it is very important to learn to read the combination of volume and price. The author also says that volume price analysis is the best way to identify smart money. Large investors and institutional players often hide the impact of their decisions, while small investors become part of the crowd. By studying volume, you can understand who is buying a stock and who is selling a stock, and this information makes your decisions data-based. Recognizing breakouts and fake breakouts is difficult without volume analysis. The authors say that a breakout with strong volume is sustainable, while a breakout with weak volume is temporary. This knowledge helps you determine the correct entry and exit points. Along with this, the volume signals tell you when it is safe to trade and when the risk is higher. The author emphasizes that the real profit of volume price analysis comes from continuous practice and experience. The market changes every day, and investors and traders should also continuously improve their viewpoint. This is the key to lasting success. Chapter 5, Part 2. Continuing, the authors say that the real value of volume price analysis is understood only when it is applied to various market situations. Every stock and every market behaves differently. For example, a slow increase in a stock's price and consistently strong volume indicates that the trend is sustainable. On the other hand, if the price is increasing quickly but the volume is decreasing, it means that the rally is weak and a reversal could happen soon. The author emphasizes that the identification of smart money and weak hands is the greatest strength of volume price analysis. Large institutional investors often hide the impact of their decisions, while small investors become part of the crowd. By studying volume, you can understand who is buying a stock and who is selling a stock, and this information makes your decisions data-based. Recognizing breakouts and fake breakouts is difficult without volume analysis. The authors say that a breakout with strong volume is sustainable, while a breakout with weak volume is temporary. This knowledge helps you determine the correct entry and exit points. Along with this, the volume signals tell you when it is safe to trade and when the risk is higher.
The author also explains that volume price analysis is not just a technical tool for trading. It is a combination of mental discipline, strategic thinking, and risk management. By making decisions according to the correct volume signals, you are not influenced by emotions like fear and greed. It makes your thinking clear and your decisions data-based. This part of Chapter 5 also clarifies that identifying opportunities in a range-bound market is an important aspect of volume price analysis. Many times, the market has limited movement and investors get confused. But by studying volume, you can understand at what level the stock is showing strong support or resistance. This information helps you choose intelligent entry and exit points. Finally, the author emphasizes that the practice of volume price analysis should be continuous. Just making assumptions by looking at charts is not enough. Only through regular practice and experience will you be able to recognize the real strength and weakness of the market. This is the real key to lasting success. Chapter 6, Part 1. The authors say that volume price analysis is not just the study of price and volume, but it is a powerful tool for understanding market psychology and investor behavior. When you combine the changes in a stock's or market's volume with the price, it clearly shows how investors are reacting. In this chapter, the authors pay special attention to identifying breakouts and reversals. Many times in the market, a stock crosses an important level, but this breakout is temporary. By studying volume, you can understand whether it is a real breakout or just a fake movement. A breakout with strong volume is more reliable, while investors should be careful with a movement with weak volume. Another important aspect is identifying smart money. Large investors and institutional players often control the market. Volume price analysis helps you understand who is buying and who is selling a stock. This information makes your trading and investment decisions more stable and data-based. The author also says that volume price analysis is also extremely important for risk management. When you trade in a movement with weak volume, your risk is higher. In contrast, entry and exit points in a movement with strong volume are safer. This strategy limits your losses and protects your investment. This part of Chapter 6 also makes it clear that volume price analysis is not just technical knowledge. It is a method of mental discipline, strategic viewpoint, and data-based decision-making. When you make decisions based on volume signals, you are not influenced by emotions like fear and greed. It enables you to trade and invest with self-confidence and clarity. The author emphasizes that the real benefit of volume price analysis comes from continuous practice and experience. The market changes every day, and investors and traders should continuously improve their viewpoint. This is the key to lasting success. Chapter 6, Part 2. Continuing, the authors state that it's difficult to identify breakouts and reversals without volume price analysis, or VPA. Breakouts with strong volume are more reliable, while those with weak volume are temporary and can reverse quickly. This information helps you determine the right entry and exit points and reduces risk. The author further clarifies that VPA is an excellent way to identify smart money and weak hands. Large investors and institutional players often control the market movements, while small investors are part of the crowd. From volume signals, you can understand who's genuinely buying and who's just following the crowd. This knowledge makes your trading decisions more accurate and data-driven. Another important point is identifying opportunities in a range-bound market. Often, the market has limited movement, and investors get confused. But by studying volume, you can understand at what level the stock is showing strong support or resistance. This allows you to choose intelligent entry and exit points and avoid unnecessary risk. The authors also say that VPA isn't just a technical tool, it's a method of mental discipline, strategy, and data-based decision-making. When you rely on volume signals, you aren't influenced by emotions like fear and greed. It enables you to trade and invest with calmness, confidence, and clear thinking.
This part of Chapter 6 makes it clear that the practice of VPA should be continuous and grow with experience. Just guessing by looking at a chart isn't enough. Regular practice and studying market conditions are the keys to lasting success. Chapter 7, Part 1.
The authors say that VPA isn't just a study of price and volume, but a powerful tool for understanding deep market behavior and investor psychology. For example, when a stock's price is rising and the volume is also consistently strong, it indicates that investors have faith in it and the trend is sustainable. Conversely, if the price is rising but volume is decreasing, it's a sign that the rally is weak and can reverse quickly. The authors place special emphasis on identifying breakouts and fake breakouts. Often stocks cross a significant price level, but the movement isn't sustainable. By studying volume, it becomes easy to understand whether the breakout is genuine or temporary. Breakouts with strong volume are more reliable, while investors should be cautious with movements on weak volume. Another important aspect is identifying smart money. Large institutional investors often control the market's direction. Through VPA, you can find out who's buying and who's selling a stock. This information makes trading and investment decisions data-based and secure. The author says that practicing VPA is also extremely important for risk management. Trading on weak volume is risky, while entry and exit points in a movement with strong volume are safer. This strategy protects investors from losses and ensures the safety of their capital. The author also explains that VPA develops mental discipline and strategic thinking. When you make decisions according to volume signals, you aren't influenced by emotions like fear and greed. It enables you to trade and invest with clarity, confidence, and a data-driven perspective. This part of Chapter 7 also clarifies that VPA is a method of continuous learning and practice. The market changes every day, and investors should continuously improve their perspective. The real key to lasting success comes from continuous study and experience. Chapter 7, Part 2. Continuing, the authors in this section focus on the practical aspects of applying VPA in different market situations. They say that every stock and market behavior is different, so making decisions based on price alone can often be wrong. Volume signals clearly show when investors are active, when they're selling, and when large institutional forces are entering the market. This information enables investors to make data-based decisions and reduce risk. The author says that correctly identifying breakouts and reversals is difficult without volume analysis. Breakouts with strong volume are usually sustainable, while movements with weak volume can be temporary and deceptive. From this knowledge, an investor can determine the right entry and exit points and avoid losses. VPA is also a key way to identify smart money. Large investors and institutional players influence market movements, while small investors are often part of the crowd. Volume signals show who is genuinely buying and who is just following the crowd. With this information, an investor can make their trading and investment decisions more accurate and confident. The author also says that VPA isn't just a technical study, but a method of mental discipline, strategic thinking, and data-based decision-making. When you rely on volume signals, you aren't influenced by emotions like fear and greed. It makes your decisions stable and clear, enabling you to work in the market with confidence. This part of Chapter 7 also clarifies that identifying opportunities in a range-bound market is an important aspect of VPA. The market can also have limited movement, but by studying volume, you can understand at which level the stock is showing support or resistance. From this, you can choose intelligent entry and exit points and reduce risk. Finally, the author emphasizes that VPA should be practiced continuously. Just guessing by looking at a chart isn't enough. Regular practice and studying market conditions are the real keys to lasting success. Chapter 8, Part 1. VPA isn't just a study of price and volume, but rather it is the key to a deeper understanding of the market and investor behavior. When you carefully observe the changes in volume and price in a stock or market, it becomes clear how investors are reacting. For example, if a stock's price is rising and the volume is also consistently strong, it indicates that investors have faith in it and the trend is sustainable. Conversely, a decrease in volume despite a price increase indicates that the rally is weak and can reverse quickly. In this chapter, the authors pay special attention to identifying breakouts and fake breakouts. Often, stocks cross important price levels, but this movement is temporary. By studying volume, it's possible to find out whether the breakout is genuine or just a fake move. Breakouts with strong volume are more reliable, while investors should be cautious with movements on weak volume.